Good evening and welcome to the fifth episode of Moneycontrol Masterclass, a platform from India's leading financial news destination, Moneycontrol, where we seek to throw the spotlight on issues of high topic and interest to our viewers and readers. But before I start with the theme today, I hope whoever is watching and tuning in from anywhere is staying home, staying safe. The current news cycle is bound to cause a lot of anxiety, but I guess as long as we are able to control the variables we have at hand, which is staying home, practicing hand hygiene, masking up, practicing social distancing, we should be fine. So please take care and thank you for joining us from wherever you are. This is a very special episode. We have four super voices from the Indian startup investing ecosystem, from the public markets as well. I want to quickly introduce all of them. We have Rajan Anandan, the MD of Sequoia India Surge, Radhika Gupta, the MD and CEO of Edelweiss AMC. We have Nithin Kamath, the founder and CEO of Zerodha, as well as Vidit Aatrey, the founder and CEO of Meesho. Now, as the plate said, the theme we are discussing is the startup funding boom in India. It's really been an unprecedented month, so to speak, or an unprecedented year so far. We saw 11 unicorns in the whole of 2020, 10 unicorns in 2021, and 6 in last week alone. One of them was, in fact, Vidit of Meesho. So, Rajan, I want to begin with you. You know, when Eileen Lee of Cowboy Ventures coined the term unicorn a few years ago, she said she chose the term because it conveyed a sense of something that's magical and rare. Now, the magic part, I agree, is there, but what about the rarity? I mean, look at the frequency of unicorns in India. What's happening? Is there a big picture factor that perhaps the rest of us are missing? What's really driving the startup boom, so to speak?
Yeah, firstly, thanks for having us, Chandra. And as you said, I hope all of you, everybody who's watching, is staying safe. It's obviously an extraordinarily difficult time in India. You can't imagine we'd be here even 2-3 weeks ago. So in terms of unicorns, look, so we've come a long way, but we still have a long way to go. Globally, at the end of 2020, there were over 500 unicorns. India had about 37 unicorns. Today, I think we have about 47 unicorns. So we still have less than 10% of global unicorns. And I think what's important to keep in mind, Chandra, is two things. One, India has 47,000 registered startups. They officially got registered in the government as startups, 47,000. So if you actually look at this number 47 as a percentage of 47,000, it is a very, very, very small percentage, right? So it's still very rare. And I think the term unicorn is very apt for the companies that are valued at over $1 billion. Now, in terms of what's happening, it's not surprising that we've seen a significant acceleration in unicorns. If you go back to 2010, India had 0 unicorns. 2015, we had 4 unicorns, and now today we have 47 unicorns, right? And it's really because of the fact that our ecosystem has changed dramatically. You know, we have 600 million internet users, 500 million of them are daily active on broadband networks. We have the world's highest data consumption of any nation on mobile broadband. We have infrastructure around e-commerce, payments, etc., that have been built out. And in addition to the large domestic opportunities, what we've also seen is the emergence of India to the world opportunities, right? 3 years ago, Chandra, as you know, India didn't have a single SaaS unicorns. Today, we have 6 SaaS unicorns. And by 2025, easily we'll have several dozen SaaS unicorns. So it's not surprising that the pace is accelerating. All I can say, though, in many ways, we've come a long way. But keep in mind, we're still at the beginning of 2021. And this is going to be India's decade for our startup ecosystem.
That's a very optimistic note to start on, Rajan. In fact, I'm going to dissect some of what you said as we move forward during the course of the discussion. But Radhika, you know, we were just discussing a while ago, when are all these billions in the private market going to find its way to the public market? And there is a lot of expectation because there is talk about, you know, Zomato and Delivery and Nykaa, a clutch of internet companies that are going to go public. And retail investors have also seen the kind of wealth that internet companies have managed to create in the US. I mean, in the last year alone, you had DoorDash, Airbnb. This week, you got Coinbase that listed at $100 billion. So, how do you see all this as someone who tracks the public markets very closely? Radhika, I think you're on mute.
Sorry about that. So hope everyone is safe and well, and thank you so much for having me. I'll start by telling you a small incident. Today I was talking to a friend of mine who's been a traditional prominent public markets investor. And in the public markets, we've always looked at companies like Page and Pidilite and sort of all the big guys in the public markets who created wealth and built great institutions over the last 10, 15 years. And he told me he's sort of migrating into venture capital investing. And I said, that's a gift for you do this. And he said, I have to give up the Page and Pidilite the next one. So I think that reflects the enthusiasm of the public markets from what is coming, from the private markets. I would add one point on a public market point of view, and then I'll come to some of these companies and IPOs coming up. I think India, not just in terms of startups, but even in terms of companies that is listing, is very, very green. In the last few years, I mean, you've seen only 1 out of 2 prominent exchanges list. You don't have all depositories listing. You're still seeing retail listings. You're still seeing logistics listings. So the public markets in themselves in India are very, very green compared to their global counterparts. The only point I would make is that I think life as a private company and life as a public company are very, very different. I think the private ecosystem, one, gives you a lot of time to experiment with your business model. I think companies that are successful in the public markets have a very clear narrative. And they know how to tell it to the market. So I think these companies will be able to come to market once they have a clear narrative. The second thing is obviously the question around profitability. And I think there's a lot of talk about profitability, but it's not just profitability. It's about having the ability to make money, convince the market that you can make money, and make money sustainably. So I think that is going to be the challenge for some of these companies to bridge as they make the transition from private to public. Because when you go down to retail investors and public markets, I think public markets can be very cruel. And we've seen enough examples of that in the last couple of years.
Right. Vidit, you're one of the newest unicorns to come out of India. It's been a week since you got that unicorn tag. What has changed in the last week? Has it perhaps put more pressure on you to manage expectations, to kind of live up to that valuation that you have raised, that, you have to kind of keep up with that for the next 2 years in terms of revenue, in terms of other metrics? So how has life changed for you?
Yeah, first of all, thank you so much, Chandra, for having me here. And I'll start with the same thing. Guys, please take care of yourself right now. At this point in time, all of us are finding very, very close people to us who are in some way affected with COVID. So I think more than any time in the last 1.5 years, this is the time for us to be careful, be at home, and take care of your loved ones. So on the unicorn status, I think the way we think about it internally is it's quite vanity, but it's a milestone for us to celebrate, right? It just gives a reason for the entire team to come together, party, give a pat on the back for everything that we have done, especially in a very hard time over the last 1.5 years. So for us, it's a milestone to celebrate. It's a time to evaluate, hey, what we have done so far and what the plans for the next couple of years is going to be. And as you said, this is definitely a responsibility, right? So it's a responsibility to everyone. It's a responsibility to our shareholders for us to create a lot more value in the future. This is a responsibility that people really believe in our vision. They believe that we'll be able to take 100 million small businesses and make them successful online. They believe in our team, that we have built a really strong team to achieve that vision. And they really believe in the story that we have built of how we will achieve that vision, right? So there's definitely a lot of responsibility on our shoulders as a team, as a company, on the founders. And I think we're excited about it. That's what we have done together the last 4-5 years. And frankly, that's the dream we had, right? For me and Sanjeev, when we started together 6 years ago, the thing that used to inspire and excite us every single day was going after a very ambitious goal that we feel really passionate about. And I think we have the same same excitement and inspiration about this. I think even more because now we have the kind of resources, the right team to kind of achieve that goal. So it's for us a lot of excitement that comes with the responsibility. But we are super happy, right? Like all of us are having celebrations on Zoom calls wherever we can, like knowing that all of us can't meet today. But we're super excited.
Super. Nitin, you put out a very interesting post last week. You said this is perhaps the stupidest time for any fintech startup to raise money, and you, of course, listed out your reasons. But Nitin, the timing was very interesting. You put this out hours after Grow announced that it had become a unicorn, and Grow, in some segment competes with you. So was that playing on your mind that day that, here I am building Zerodha without any external fund, and my competitor has raised a huge round. They're now going to spend to go after customers. They could perhaps build out products faster. What was playing on your mind?
No, I mean, the thing is, I this whole Grow thing came to my head only after posting the tweet because someone tagged Grow. See, I knew about the Grow's investment a few weeks before, so it wasn't triggered by the Grow's announcement. But the thing was, I think leading up to the tweet, I just kept getting pings, right? Like this over the last few weeks. This has been running constantly, right? People constantly saying, hey, what, your competition's raising, everyone's raising, why don't you guys raise? Or why you're not advertising? So I thought, let me go tweet about what is the reasoning behind doing it. And but maybe the timing wasn't right, actually, looking back at it. I didn't realize that in my head, it was the Gross news was at least 2 weeks old. So.
Okay. But again, was it a particularly hard day for you, Nitin, or a particularly hard phase when everybody's asking, why aren't you raising money? There's so much money that's available.
There's nothing hard about it. I mean, just being in a place to say no to money, I mean, that's a privilege. So I don't think there's anything hard about that. It's just the constant, explaining everyone why not. So I thought maybe you should just do it publicly. So.
Right. And Rajan, you mentioned all the factors that are sort of coming together for India. I remember many years ago, you made this point about how, e-commerce companies really take off after GDP per capita touches $4,000, which is what happened in China. If you look at India, we are still at 2,000. So what has fundamentally changed about the depth of the market, the breadth of the market, the purchasing power that's making investors so optimistic across stages?
Yeah, I think before I get to that, I think what Nithin didn't say, and I should say, the objective is to build a truly enduring company, right? That can have an impact on the nation you live in, on the consumers you serve, and in some cases, the entire world. And to build an enduring company, eventually you have to be very, very profitable, right? And have extraordinary customer satisfaction. So what Nithin didn't say is he's built an enduring company, right? I think we'll all agree that it is arguably, without any question, an extraordinary company. And to have done that without raising capital is literally 1,000 times, maybe 1,000,000 times harder than doing it with capital. So you actually, I didn't even see the tweet that Nithin put out, Chandra, but as I was telling you before we got started, we were fortunate to have Nithin come and speak to our Surge founders. And I must say, they were just blown away, right? Because how do you build such an extraordinary company entirely bootstrap, right, without raising any external capital? So I just thought I'd start with that. Now, going back to your question, Chandra, look, what has changed is I want us to go back to 2015, which was only 6 years ago. 2016, India had about 200 million internet users. We didn't have broadband, right? It launched September 5th, 2016. We didn't have UPI, right? That we only had 4, by end of 2015, we had 4 unicorns, right? SaaS was not really a thing. And quite frankly, if you asked anybody, all the startups around 2015, they were trying to build the X of Flipkart, right? Either they were trying to launch an e-commerce company, or they were trying to launch something that looked like Flipkart, vertical commerce, et cetera, et cetera. The whole thing was all really about e-commerce, right? Now, if you fast forward to where we are today, right? April of 2020, 2021, we have 500 million daily active users who are consuming 16 gigabytes per user per month, right? This is the world's most thriving, if you call it, mobile internet ecosystem, right? We consume more mobile broadband than China does today, right? We have a fully built-out payments ecosystem that is the most advanced in the world, thanks to Aadhaar and then UPI that got built on Aadhaar, right? And thanks to Flipkart and Amazon primarily, we have the logistics and infrastructure capability today to be able to deliver to the very last pin code within a 3 to 4 day time frame, right? That didn't even exist, remotely, right? So that's one. The second thing that has happened is the first generation of our unicorns, has created a pool of talent that is quite extraordinary, right? I can't tell you, every single day, Chandra, I meet between 5 to about 8 new entrepreneurs, right? Entrepreneurs are just starting up. A large number of them actually coming from India's unicorns or sort of global academy companies like a Google or a Facebook. A lot of, whether it's Freshworks, whether it's Flipkart and so on and so forth, right? So the entrepreneurs who are starting up today have a lot more experience, right? And the third thing that has happened is capital is now abundantly available. Although, I'll talk about this hopefully later in the show, we still have a long way to go. And finally, we've opened up an entirely new frontier of building what we call India to the world businesses, right? It started off with SaaS. As I said, 3 years ago, we had no SaaS unicorns. Today, we have 6. But really, it's not just SaaS. Today, Indian entrepreneurs are beginning to build consumer product companies. They're launching fintech products from India to the world, right? And so not only do we have, a massively thriving, highly connected, reasonably well-funded domestic startup ecosystem, but we've also opened up the world. And when you open up the world, Chandra, you go from targeting the economy, which is 3 trillion of GDP, to targeting the world, which is 80 trillion of GDP, right? So it's really, we can't really compare 2015 to where we are today. And the last thing I'd say on this is, look, 5 years from now, when we look back, we'll say the same thing about 2021, which is 2025 will not be comparable to 2021, right? Now, to your last question about $4,000 per capita, look, that is going to be very, very important because, India is going to hit $4,000 per capita somewhere between 2026 and 2029. What I can tell you, Chandra, is when we hit that point, everything on the consumer internet market in India, well-run business will grow 100% year on year. It almost doesn't matter what the scale is because you're going to see just today, e-commerce, right? Overall e-commerce, obviously, Nithin and Meesho are growing much faster than this. But if you look at overall e-commerce in India, about $40 billion of GMV, growing at about 35%. Okay, come 2027, we'll be at probably $150 billion of GMV. Indian e-commerce will grow at over 100%. Because that is the tipping point that we've seen. And by the way, we're seeing this in Indonesia. Indonesia at $4,000 per capita, Chandra. Indonesia's e-commerce market is bigger than India, and it's growing at over 100% year on year. So this is going to happen. So that's what I said. We think a lot has happened, but it's just still the very beginning because it's only going to get more and more.
Picture abhi baki hai. So picture abhi baki hai in a sense. But Radhika,
yes.
You were telling me about you were telling me about one of your friends in the public markets who's now showing interest in the private market. But I remember, last week this image also went widely viral about startups, their revenue, loss, and expenditure. And people said, why are loss-making startups getting these valuations? Now the thing is, how would you sort of explain that to retail investors? Will these retail investors have the appetite to invest in internet companies in India? Because even if, Infosys misses margins by 10 basis points, next year you will see the Infi stock, down by some 5% or the TCS stock down by 3%. That's the sort of elevated expectations that listed companies have among analysts. So do you see that changing? Do you see that mindset shift happening among retail investors here?
So I'll come to retail investors. Yes, I think firstly, I also put out a bad tweet at that point about the market cap of companies, and I think the market cap of the small cap index being less than the collective market cap of various unicorns. So in reflection, I don't know if that was a great time, but that is a separate point. I think maybe I should be more careful with the tweets. But I think there are 2 parts to it. One is the profitability part and second is the retail investor part. Now, as far as the profitability part is concerned, is one of the concerns that, at least I've seen, and I totally buy all the macro arguments in my own industry. And you talked about Grow, and a number of asset management companies themselves are listing in public markets. The level of under penetration is so incredible. For instance, in mutual funds, we are about 4-5% of GDP when the world average is 40%. So I think a lot of things are not understood by numbers. So when my own industry gets valued at 40 times earnings in the listed markets, it doesn't make sense, but then it makes sense when you look at the opportunity. So I think that's one thing to keep in mind. But one of the challenges is that how many companies are actually going to come to list? Because today there is so much, and I was talking to a large internet entrepreneur, there's so much private capital chasing startups and companies without putting pressure of sustained profitability on them. When you make the transition to public markets, it's going to be a much tougher transition. Everyone, of course, quotes the Amazon story, but for every one successful Amazon model, there will be many, many who failed. As far as retail investors are concerned, honestly, retail investors have no business investing in companies without a proven track record. They have no business investing in funds without a proven track record. Today we see that because Indian tech companies are not accessible to retail investors, possibly the most popular theme for retail investors in the last year has been investing in US technology companies. So NASDAQ linked products, technology linked funds, everybody is buying them. I can tell you the day that there is a 20-30% movement in the prices of these funds, there is going to be panic among retail investors. So there is a reason that private capital is meant for sophisticated investors, and public capital demands a different set of requirements that work for retail investors. So no, I don't think these companies are ready for retail investors. The Indian retail investor is far less sophisticated than we imagine, especially compared to his global counterparts.
Right. I just want to welcome all the people who are tuning in. And if you have questions, please keep sending them on our Twitter and YouTube channels. We'll ask the panelists to answer. But Nithin, do you want to come in on what Radhika said? Nithin, I think you're on mute.
Oh, Jesus. Okay. Yeah. So sorry. So with the success of Zerodha over the last 2-3 years and us starting Rainmatter FinTech, which is the incubator, we've been given opportunity. We were lucky to be, have gotten the opportunity to kind of invest in some of these startups over the last 4 years. I mean, the returns are ridiculous. I mean, it's just like, I don't think we've made, I mean, even though there are small amounts of money that we invested, but the ROI has just been ridiculous. So all the money today is actually, all the wealth creation is actually happening in the private space. So, I mean, that is a challenge. So, I mean, if all the wealth creation is happening in the private space, how does retail investor benefit out of it? I mean, and will the retail investor get to invest only once, a company is completely juiced out and, and it lists on the exchange, right? So, and then, can he really benefit out of it? So these are kind of, I think, important questions to ask. But I think over the last 5-6 years, knowing a lot of VC friends and also doing some investments, I think all the wealth creation is really happening in the private space. The public space is giving far fewer opportunities. I think the challenge with the private space is just getting deal flow, right? As in, unlike public markets, you can't just open a trading platform and buy the stock you want, right? As in here, you need to get invited to get in, to be able to invest into a company, right? So, but I agree with Radhika is that unless a company can have a track record and of being profitable or being sustainable, I don't think retail investors should really look at it. But like I said, the other side, the flip side in all of this is that I think by the time a company is sustainable today, it is probably already max valued sorts, and wealth creation will probably be tougher by investing in such companies. So it's a tricky place to be in as a retail investor.
Right. Vidit, tell us about how it has been for you raising money in the current environment, because people keep saying, it's such a good time to be an entrepreneur in the market. raising funds. How was this compared to the previous round for you in terms of the interest you saw? Is it a founder's market, so to speak?
Yeah, I think I can only give you like our own experience. I don't know if all founders are facing the same thing. It could be a founder's market. So we raised money from SoftBank, who's the only new investor, and all of the other investors were existing investors because they continue to have a lot of confidence in the company, in our story, right? So, and SoftBank as a fund, we've been speaking to them for now close to 2 years. So it's not a conversation that started 1 quarter, 2 quarters ago. It's like we've been in touch with them, and suddenly, like, they've been tracking us for quite some time, and this time they took a step forward and said, hey, we are super interested, we've been talking to each other, we want to make this happen. So I think what has also happened is, if you have to look at the last 1.5 years, right, because of all the pandemic thing in the early part of 2020, I think everyone was very inactive because people wanted to see what will happen. Whereas in the second half of 2020, you saw a lot of technology companies really leverage the opportunity in digitizing everyone, consumers, small businesses, a lot of them, and they started to grow at a much rapid pace because to some extent, the competition, which is offline, was struggling, right? So a lot of acceleration in growth for a lot of these companies happened, and there was no activity happening in the first half of 2020. So everything accrued in a short span of time. Some of these conversations started, a lot of them materialized in the first half of the year, and that's why you saw a lot of these announcements happening together. But I think a lot of this is attributed to two things. One is digital acceleration last year, and second is not a lot of activity happening in the first half of 2020. And because of that, we are seeing this happen. Like, for example, if I just talk about our space, you see e-commerce globally has got a lot of tailwinds. You look at any geography, and a lot of these companies gain in valuation even in the public markets because of what happened with the pandemic. And I think the same thing is now translating into the private markets, where it generally takes a longer time. And that's when you see some of these news coming out. But yeah, that's my view. I don't know if it's a founder's market. It depends on sector to sector. Maybe certain sectors gaining more. Maybe Rajan will be better suited to share a lot of that.
Right. Before I get Rajan, Nithin, I actually wanted to ask you, what do you make of the current funding that we are seeing? How does this compare to previous cycles that you've witnessed? You know, apart from running Zerodha through Rainmatter, you're also an investor. So how does this compare to previous cycles? Are there more sound fundamentals this time around?
Yeah, no, I mean, the thing is, the previous cycles, I mean, I was a trader through my life. So, you know, my cycles in the market have been more on the public market side. Private side, I think it's only the last 3 years that we've seen play. And like Rajan was saying, I think there are, like, the way I look at it, right, is that there's so much of liquidity out there. And VCs and PEs are like businesses also, right? As in, they have to go find good companies to invest in. And if there is too much of supply of money, I mean, automatically the founders and other valuations go up. And I think a lot of that is also happening. I think it's just like if you see some of these seed rounds now are $5 million valuation. I mean, it doesn't make sense to me, but maybe there is an angle to this, like how Rajan was saying. You know, if you're looking at 2026 to 2030, and if, you know, India is going to be at $4,000 GDP, I mean, I think it probably makes sense if you're thinking of that long term to be investing at whatever valuations we are today. But one thing's for sure, that there is excess liquidity, and I think good founders are probably, you know, are finding it extremely easy to go raise capital out there. So.
Rajan, what do you have to say in response to, you know, extraordinarily high amounts happening at the seed round? If you can give us your perspective.
Yeah, I think, Chandra, before I go to that, I wanted to comment on, I think, what Radhika and Nithin have both said, right? Look, first of all, Radhika, we have good news for you. I think over the next 2 years, you will see a large number of Indian startups list on the Indian exchanges, right? And these will be companies Some of them will be consumer products companies, some of them will be because keep in mind, startups are not just consumer internet apps anymore, right? Indian startup ecosystem is really broad-based. So you're talking about consumer internet, e-commerce, consumer product companies, financial services companies, fintech companies, lending companies, SaaS companies, and so on and so forth. So it's a pretty broad range. In fact, the broad basing of India's startup ecosystem is a big story. So first thing is, Radhika, we have good news. I think over the next 2 years, you'll see a large number of Indian startups go public on the Indian exchanges. That's going to happen. In fact, 3 of our Sequoia Capital India portfolio companies went public, 2 of them in India in January. Actually, Indigo, which is a paints consumer products company, and then Stovecraft. The third one was actually Appier, which is one of our Southeast Asia investments that went public in Japan, right? And throughout the course of the year, you'll see many IPOs from the Indian startup ecosystem. Some from the Sequoia stable of companies, but many of the other investors. That being said, one of the things, Chandra, as you know, that has been one of the single most important asks from the Indian startup ecosystem is the ability of Indian unlisted start companies to be able to list directly on international exchanges, right? And it's exactly for the reason that Radhika articulated better than I could have ever imagined, articulated why we need that, right? Because, and I want to start by giving you 3 analogies, okay? Last year, Airbnb went public. It's a $100 billion market cap. Airbnb's net income was negative $5 billion, okay? I want you to imagine Airbnb going public on the Indian exchanges. Would I'm sure agree that not possible, right? Negative $5 billion of net income, not going to happen. Second company was a company called Snowflake, the most successful SaaS company that went, cloud computing company that went public. The third one was DoorDash, right? All 3 of those companies, 40 billion, 50 billion, and 100 billion market cap companies, not profitable at a P&L level, right? Now, the reason this direct listing of Indian startups to international exchanges is very, very important, Chandra, is because we need to access our companies today. Our Indian startups are at a handicap, right? We don't have a level playing field because our best companies that have global ambitions that need more capital can access large amounts of capital if they were able to directly list outside of India. That's not possible. So I just thought I'd put that because it's something we've been talking about for a long time, but hasn't happened yet. I'm really hoping that the government will make this happen, because the last thing we need is, startup India cannot handicap our best companies, right? And that's what's sort of happening today. Now, going back to your other thing, look, the vibrancy that we're seeing at the seed stage is extraordinary, right? So, at Sequoia, we have a program called Surge, Chandra, as you know, it's a seed stage program. We launched it 2 years ago, right? I can't tell you, look, so we talked about the macro changes, right? The broadband users, the payments infrastructure, the e-commerce, the logistics infrastructure, and so on and so forth. But the most important thing that has happened is the quality of the Indian founders has gone up dramatically, because many of them have grown up in companies that have scaled very, very rapidly. They have been trained as engineers who've seen scale. They've been trained as product managers. They've been trained in all aspects of company building, right? And so what you have today, and by the way, as a seed stage investor, and Nithin mentioned this, right? A seed stage investor needs to take a 10 to 15 year horizon. You should not be investing at seed stage if you're thinking about how big can this company be in 3 years. That is the wrong question to ask, right? The question is, can this be a very, very large company 10 or 15 years from now? Because it takes 10 to 15 years to build a very large company. And I don't mean unicorn, by the way, as Vidit rightly mentioned. Unicorn is a milestone, right? You get there. But at the end of the day, you build a large company which is very large amount of revenue and is very, very profitable, and it continues to grow after that. So if you take a 10 to 15 year view, at least the view that we take at Sequoia and at Surge, Chandra, is whether the valuation of a company is 5 million or 10 million or 15 million is actually the wrong question to ask. The question you should be asking as a seed stage investor, and hopefully in Moneycontrol, you've got a lot of people who are watching who are also angel investors, is please don't obsess about the price. These are not public equities, okay? These are private equities at the very, very early stages. The question we should be asking is, number one, is this a founding team that you believe can build a very, very large business? And second, do you believe that the TAM, what we call TAM, the target addressable market, is it large enough where you can build a very large company? And if the answers to those 2 things are yes, then it really doesn't matter whether it's 3 million, 5 million, 10 million, or 15 million, right? And I think one of the single biggest mistakes seed stage investors make, angel investors make, is they obsess about price. Because instead of doing that, they should really obsess about founder quality and founder capability, and market size, right? Can this become a very, very large company?
Right. In fact, Rajan, I have a follow-up question for you. You're also one of India's most prolific angel investors. And in the last few weeks, I hear about many professionals, people who have perhaps spent 10, 15 years working in investment banks, research outfits, suddenly taken interest in angel investing. So they've signed up on platforms like AngelList, they're reviewing decks. So, as Nithin said, when these companies go IPO, a lot of the value is already maxed out. And at the angel and the seed stage, not everyone gets access to, those kind of deals. It goes out either to other founders or to, there is a network effect at play there. So how does one really identify these companies or these startups to invest in?
Yeah, so I think firstly, Chandra, Let's Venture is the largest crowdfunding platform in India, right? Shanti is the founder of Let's Venture. Then we have other platforms like AngelList and so on and so forth. There are quite a few. So the reality, first of all, today is every single person who is watching Moneycontrol, right? I think I know your audience, Chandra, can actually become a member of Let's Venture. All you do is sign up, right? Because everybody who's watching Moneycontrol, I assume, is investing in the equity markets, therefore has some level of disposable capital and can actually become an angel investor. So first of all, and by the way, Let's Venture last year did they closed 1 to 2 investments every single week, including all through lockdown. Okay, that's the level of activity that is happening on Let's Venture. And Let's Venture is only one of many platforms. Would be the Indian Angel Network, so there are now many ways in which you can get access to company. I think as an angel investor, what's very important is it's like anything else, right? You have to take the time to learn about it. You have to take the time to actually co-invest with others so that, it takes 2, 3, 4, 5 years to learn how this works, right? So because unlike in public equities, a large number of early stage startups, don't work out, right? You don't buy a public equity and it doesn't go to zero. I mean, as an angel investor over 15, 20 years, invested in a large number of companies, right? Everybody only remembers, by the way, the unicorns, but there were a large number of companies that didn't work. So you have to sort of learn how angel investing works and architect a portfolio where you know what you're investing in. And you also are very, very clear of how the math works out, right? 1 out of 10 can become a massive blockbuster. A few of them may return 5 to 10x capital, but there will be quite a number of the 10 that will actually not give you any capital back. And so I think learning how this works is very, very important. But what I can tell you is every single one of the folks who are watching your show, Chandra, can become an angel investor today. And I just go to Let's Venture, right? Or you can go to any one or the other, and depending on which city you're in, if you're in India, if you're in Delhi, join the Indian Angel Network, or if you're in Bombay, join the Mumbai Angels or Indian Angel Network. There are many angel networks today. So I think Nithin made a point where, there's a lot of value that is being created in the private markets, but it's like anything else, right? You have to learn how to do it well, because, just blindly investing in a whole bunch of startups may not work, because remember, most startups actually don't work, right? So you have to kind of learn about it and systematically kind of be at it.
Right. Radhika, I just want to come to you. Rajan spoke about how Airbnb managed to list in US at that valuation, which would be impossible in India. So should we think about a private trading platform perhaps for startups, for unicorns? What are your thoughts there?
So 2 thoughts. I do think that India needs to seriously think, because Rajan made a lovely point about the fact that Indian startups do need capital, and to not let them list abroad via direct listing is a problem. I also think we should contemplate now an exchange like NASDAQ. I think NASDAQ in that sense in the US was transformative, and put together an exchange like the NASDAQ where the listing rules are easier. Perhaps, the requirements in terms of the kind of investors who are investing on NASDAQ is higher. So maybe you don't open it to retail, right? Because there is a gap of investors that exists between pure retail investors who are clearly not sophisticated enough and institutional investors who've been backing these companies privately. There's a whole range of people in the middle. So why don't you facilitate either private trading platforms on the exchange so that some of this, can be exchanged, or a lighter, more startup-focused exchange like a NASDAQ? I think to some extent, SEBI is trying to do this with the Innovation Growth Program, but it's in early stages. The other place, Chandra, I must say, and Rajan talked about angel capital, that capital is coming in and participating. And I think maybe this will extend to retail. It's already coming to the HNI investor in India, is the whole pre-IPO, IPO space. So there are companies entering the public markets, and unfortunately, when by the time these companies come to the public markets, there's so much demand for them that as an HNI or retail investor, you actually get no allocation to them. So forget the point of wealth creation. I mean, wealth creation is a separate animal. You just don't get substantial allocation to them at the time of IPO. But sometime between when the company is an established private company and is going for listing, what we call the 12 to 18-month pre-IPO space, that's actually heated up. I mean, I've seen probably 20,000-30,000 crores of pre-IPO funds raised in the last 2 years. That is largely Indian HNI capital. And so that's another place where the point is a little safer for individuals to come in. The individual is a little more sophisticated and he's coming in and tapping this via the AIF platform. So I think there are a lot of intermediate solutions that don't involve retail investors directly coming into angel things. But I think there is a strong case for an exchange like NASDAQ that is a little more friendly for startups.
Right. Vidit, do you think the focus this time, this cycle around, is also more on sustainability, profitability, not growth at all costs? What's the sense that you get when you talk to other founders, other investors? After the WeWork debacle, is there perhaps a sharper focus this time around on building the right way, value with valuation?
Yeah, I think that has been there for quite some time, not just this year. If you look at it, a lot of funding rounds that happened last year, even though massive amount of capital has come to India, it has been more at the growth stage, right? Lots of larger checks happening instead of mid size. It used to be a thing in the previous 5-6 years ago. So I think that's a big fundamental difference, and it's coming into the growth stage because a lot of these companies have very clear unit economics, you have very clear story around what kind of market you're going after, you are at a substantial revenue or sales scale, right? So there's a lot more validation to the story. And that's why I think the confidence of some of the investors to put larger checks much higher. I think definitely what you talked about, which is this time, I don't think people putting money into companies where they don't know what's going to happen. I think people are much more confident because some of the basic fundamentals are clear. People are moving, the company is not moving as much money. And you see, even the last week, a lot of these rounds happened. None of them seemed like rounds where people were diluting 30-40% of the companies, right? Like most of these were like 10, 15, 20%, which generally means that these companies are not desperate for money, and that will happen when their balance sheets are sorted, their P&L are nice. So I think a lot of this is very different from some of the earlier funding phases, which is quite positive for the ecosystem.
Right. And Nithin and Rajan, I'm going to throw this to both of you. So there are some people who are asking us, is this a bubble? I'm going to ask Nithin to go first and then perhaps Rajan can come.
Oh my, yeah, I don't know. It feels a little like bubble. I mean, it feels like bubble because there is such a big rush of liquidity, not just in private space, maybe a little bit in the public space, because there is, what markets are doing is so detached to what's happening to the economy. So maybe all of that makes it seem like a bubble. But the thing about bubbles are that, even if it's a bubble, you don't know how big it gets. So I think it's no point trying to time these things. You have to kind of go with the flow and, just have your rules in place, which is diversification and stop losses and all of that. So.
Right. Rajan, do you want to weigh in? Because, you've mentioned a whole host of reasons, what has changed in the last few years in terms of the payment rails, the data costs, the founders. But if you look at some of the key actors, they are back in roaring form, be it Tiger Global, SoftBank. So, and, the amounts and the pace at which they're investing is making people apprehensive. What would you say? How would you address these concerns?
Yeah, I think Chandra, first thing to keep in mind is that there's 18 trillion with a T, right? Dollars of capital in the world today that is at negative interest rates. That is why you're seeing PE ratios at an all-time high in every public equities market anywhere in the world. I think Radhika can talk to what's going on in the Indian exchanges. And that is why you're seeing lots and lots of capital coming into private markets, right? Because think about it, $18 trillion of capital at negative interest rates. So the world is a wash of capital, and this capital is actually looking for returns. Anything that is better than zero is good. And then if you can get better than 10% a year, that's pretty good. And then above 20% is sort of extraordinary, right? I mean, from a global macro context. So I think we should keep that in mind. The second point to keep in mind is, look, everything has a cycle, okay? Nothing goes up really, really fast without also coming down at some point. So keep in mind, there always are going to be cycles, right? Now the question to Nithin's, and by the way, to Nithin's point, you can never time them, right? I think if any of us could time the market perfectly, none of us would be on your show, because the time might have been like while we were on the show, right? So I think you can't be timed, but there are cycles. I think what the real question is, what should investors do? And what should startup founders do, right? I think investors, at least we believe, and Chandra, as you know, right, Sequoia Capital has been in India now for over 15 years, right? Every 2 years we, raise new funds, right? Our last set of funds, which were in June of 2020, as you know, the venture and the growth funds were the largest funds that we were fortunate to be able to raise. And we also just closed our seed fund. We are here to stay, right? Sequoia Capital is here for the next 100 years. We will keep investing every week, every month, every year. And it's not just us, right? There's a whole set of other firms like Accel, like Lightspeed, like Elevation, a lot of the Indian firms like Kalari and Bloom and others and so on. There will be some global firms that may actually have spurts in which they invest a lot more and maybe they go quiet. But the reality is India today has a well-established ecosystem, a set of investors, large number of investors that keep investing. So as an investor, the thing to focus on is, are you backing extraordinary founders who are going after large markets? And then in late stages, do you believe they actually are building very interesting businesses? And what I mean by that is, at the end of the day, every business, and I mean every business, needs to generate an enormous amount of cash flow. Okay, I spent a long time at Google. Google is not Google because it's got billions of internet users. Google is Google because it's got $150 billion in the bank, and it generates north of $10 billion every year in cash flow, right? So you've got to believe great team, big market, and got a business model that eventually will actually become massive economic value creator. So that's what you've got to focus on as an investor, right? If you find those companies, as I said, at where I spend most of my time, which is at seed stage, whether it's 5 million or 10 million or 12 million, that's not really the question. As a startup founder, I think if you're able to raise capital, what you should do is, number one, raise it from high quality investors, okay? Because whoever you're raising money from, Chandra, as you know, and Nithin knows this, Adit knows this the best on this call, is going to be with you for a decade, okay? It's a 10 to 15 year commitment to a set of investors. So make sure you're partnering with the right set of investors. And second, whatever you raise, be prudent with what you raise. Because we don't know whether we're at the top of the cycle, middle of the cycle, we're not at the trough of the cycle, but we know the cycle will change, right? And so, if you're able to raise a large amount of capital, at least what I would sort of caution founders who are able to raise a large amount of capital is, be prudent, right? I mean, India, Maharashtra is in lockdown, Delhi is in lockdown this weekend or tomorrow over the weekend, right? We're at 17,000 cases a day yesterday. We're going to be at 300,000 within the next 10 days, right, Chandra? So we're going back into a very uncertain world. So I think if you're able to raise from the right investors, be prudent with your capital, but most importantly, focus on building an enduring company, right? Because, if you don't do that, by the way, Chandra, lots of unicorns that became unicorns are no longer unicorns. Why? Because they didn't build enduring companies, right? So I think, so again, right, are we at the peak of the cycle? Are we not? Are we a bubble? Wrong question if you're an investor, and wrong question if you're a founder. The right questions are, can you find the right companies to invest in if you're an investor? And if you're a startup founder, can you get the right investor on your cap table? And most importantly, please use the capital wisely. So
is the momentum here to stay, Rajan, at least for the rest of the year?
So let me give you, okay. So, I get this question often. The problem with us is we only remember the last 5 or 10 years. We don't spend as much time thinking about the next 10 years, okay? So last year, Chandra, India had $10 billion of startup funding, okay? 10 billion per year. China had 70 billion last year. the US had $130 billion of funding that went into the US ecosystem. 2019, India had 14 billion. We declined to 10 billion. China and the US both increased the amount of startup funding. Okay, so if you ask me, is the momentum going to continue? I would say we're just getting started, right? Because we're at $10 billion of capital going into startups. We have 47 unicorns. China had 70 billion last year. They've got over 200 unicorns. US at 130 billion, right? And keep in mind, we have yet to see what we're really going to see, which is very large companies, right? The most valuable Indian startup today is Paytm. The second most valuable is Byju's, right? But these are 17 billion, 15 billion, right? We are going to have 50, 100, 200 billion dollar Indian tech companies, right? Outside of IT services, because TCS is already 150 billion. But we will have this generation of startups that we're talking about today. Some of them, a few of them, will really break out, build enduring companies. And in a short period of 8-10 years, we'll get to that 50, 100, 150 billion dollar type valuation. And Radhika, let me tell you, they will all be public, because eventually all enduring companies, except for Mr. Nithin and Zerodha, who will probably get the implicit valuation of 100 billion while still being private. No, I mean it. And by the way, you can do that, right? And I think the founders who can do that are extraordinary. But there will also be the other large group of founders who will decide to go public and so on and so forth. So long answer to your question. Look, I don't think we should overthink the fact that we've got a lot of capital. We've got 10 unicorns so far. So what? We're at 47. China is at over 200. US is at over 200, right? The question is, how can India go from $10 billion of funding per year to $50 billion of funding per year? And that is the thing. In fact, yesterday, we were fortunate to have a meeting with the Startup India team in the government. And that was sort of the discussion, right? How do we dramatically upscale our ecosystem to take it to a whole new level?
Radhika, you want to come in?
You're on mute, Radhika.
Sorry. So firstly, I think you said unicorn is supposed to be like this mythical thing that never exists. Nithin will be the guy who's the actual unicorn, right? The thing that is magical and hard. So that is clearly Nithin out here. Before I answer your question, Chandra, I'll come to Rajan. We currently run a US technology fund, and people are always pushing us that India is only IT services. There are no disruptive tech companies. I hope you're right, and I can run an India technology fund or an India disruption fund that is not IT services, because all these companies come to the listed markets. But I agree with Rajan. Look, I think one thing you have to remember is world over we are flush with liquidity, and even in public markets, you get this question of bubble or not. Markets rarely, public or private, are in equilibrium, and India is not, by the way, the only public market that is attracting large amounts of capital. With the rates where they are, nearly all emerging markets are attracting significant amounts of capital in the public and private market. To that question, Chandra, of bubble or not, I think there are good companies and bad companies, even in the public and private markets. And the unicorn tag is a milestone. And financial services is the space I follow the most closely. There are companies in the unlisted market in financial services that I don't understand how they're valued significantly higher than listed counterparts in the public markets, and vice versa. I would just tell people on the call who are excited about all the enthusiasm about valuation to just note the words that Rajan is probably India's most successful unlisted investor, said again and again. He didn't talk about valuations that much. He talked about all the things that matter in building a great company. He talked about free cash flow, which is very, very important. He talked about profitability, and he talked about prudence, which is cost control and margin control. This is what a public market investor looks at: companies that are profitable, companies that control margins, and companies that deliver return on equity to shareholders. So I think if you focus on the fundamentals of businesses, you'll quickly find out what is a bubble and what is not.
Right. Vidit, they always say hindsight is 20/20. But if you had to go back and do this 6 years ago, would you still raise money from external investors? If you had a chance to bootstrap, would you have done that? Or for a social commerce platform, is it vital to sort of have money at every stage so that you can acquire customers, onboard sellers, resellers, and scale up?
Yeah, I think to me, I don't think raising money and not raising money is so important that we make decisions. Hey, I don't want to raise money, so I'll figure out something else. What inspires us and keeps us excited every single day is the vision that we are going after. It is large, ambitious, and very, very impactful for India as a country. And I think that's the reason we do what we do. And then it depends on the type of business you are in that defines whether you should take capital from investors or not. Right? So if you look at the kind of business we are in, for the early days, especially if you look at e-commerce, you have to spend a lot of time. You have to really invest in building out the right technology in the early days, iterate with a lot of things, get to product market fit, and get to a certain state after which you have critical mass where the economics start to work. And that is a significant period. That is a period of at least 3 to 4 years that we also had, and we had to raise money. And now we're in a very different state where we're saying, hey, can we accelerate and grow as a company really, really fast? Can we achieve what we can achieve in the next 3 years that otherwise will take us 5 to 7 years? And if that requires us to raise capital, we should do so. Right? So I think it depends on the objective, but I don't think we've ever thought about whether raising or not raising money is the stigma, and that defines what we're doing as a company. Right? To us, our inspiration and fuel is very, very simple. It's always the vision that we want to achieve. It's always the scale of impact that a business will make. And I think that fuels the entire company in doing whatever we are doing.
Right. Makes sense. Nithin, for founders who are building and are not raising money, either they don't want to raise or they are not able to raise money, what would your message be to them to keep going?
Yeah, no, I mean, just to add on to Vidit, right? I mean, the reason we didn't raise money was because we didn't have a reason to raise money. I mean, it's not, if we could have raised money to grow faster or do things that we couldn't do, otherwise, we would have probably gone ahead and raised money, right? As in, so there is nothing every business is built differently, and there is no cut, copy, paste that works. So I think the founders have to do what is right for their business. So now, the thing about people who are not able to raise money, I think in an environment like this, if you're not able to raise money, maybe you should sit back and think about it. Because a lot of time, you end up putting a lot of effort behind a cause which may not be on the right track, and a lot of these times, the best thing to do is do something else, right? And that. That decision is an extremely important decision, because it's just not the money that's invested into a business that you're trying to build. It's also about the time, the opportunity cost and all of that, right? So yeah, so I my advice for those, if someone's going through tough times and not able to raise money, is define a stop loss. I mean, like saying this is how much more time or this is how much more money I'll put into this before it trends up or something, so have some metric to say this is, I need to make this change or whatever, right? And if it doesn't happen, get off the ship and do something else. That's probably the best thing to do in life.
But should they be judged based on their ability to raise funds, Nithin? Just throwing that back at you.
No, I mean, I think that there is that pressure today for sure, right? As in, I mean, one of the reasons for me having to tweet about this funding, etc., was also that, because I see a lot of my founder friends, being judged by the family, by the friends, by the people who work in the business based on the valuation of the company, right? I mean, we're still not a unicorn and all that shit, right? So that pressure is built up in this ecosystem today, and I don't really know what's the right answer, what's the right way around it, but I don't think you should sweat too much about getting to a certain valuation number. I don't think that should really be a metric that people should be chasing.
Right. As we wrap up, I would like each of you to sort of give me one big trend or one big picture idea, for 2021 for India in terms of funding, in terms of startup. Maybe Radhika, you can go first.
So I'm not the funding person, but I think this conversation leaves one with a lot of hope. And I'm hoping, Chandra, we have ultimately in the listed markets that I represent, probably about 300 companies of some size that are not state-owned. I hope over the next 2 years, as what Rajan says comes true, we add 20 to 30 really serious listed companies to the ecosystem. I think that will be a great thing for our capital market. So I hope that happens. And I think one space that I come from and that Nithin comes from, which is financial services, I think it's a tremendous opportunity. So I hope we have tremendous disruption in financial services.
Right. Vidit?
Yeah, I think as an entrepreneur, one thing that I'm really, really excited about is because of all the capital that is available in the private markets, so many like really, really smart people, very passionate people around me are starting up companies and working on problems that were just not something people even thought about 5 years ago. So I think that is very, very positive. Like for me, I spend a lot of time with some of the younger entrepreneurs, sometimes helping them out. And I think it will just happen more and more, which is a very, very positive trend. And maybe that's happening with the capital. So I just feel that there's never been a better time to start a company. If you have had a dream of doing it at some point in time, I think you should do it today. And the ecosystem is.
Right. Rajan?
Yeah, I think, look, I completely echo what Vidit said. There's never been a better time to start up in India for all the reasons that we've talked about over the last hour. I think what's really exciting us, Chandra, is India is now building companies of serious scale, startups of serious scale, and many of them are uniquely Indian, okay? So if you go back to 2017, nobody would fund an e-commerce company because it was pretty clear that between Amazon and Flipkart, right, this market was going to be taken, right? But then in beauty, Nykaa shows up. Hopefully that will, Radhika, be one of the companies that will make you happy when they list. But then look at Meesho, right? There is no company like Meesho in the world. Vidit and his co-founder are building a company that is uniquely Indian, that is going to be, without any question, 5-10 years from now, not just one of the largest e-commerce companies in India, right? Taking on two companies we thought couldn't be taken on because they have innovated on the business model. They were obsessed about their users. And I don't know whether you know this, Chandra, I assume you've talked to Vidit, but 9.5 million women, and that number is probably higher, make a living because of Meesho, right? So and this is one of the many companies, right? If you look at it sector by sector by sector, what we're seeing today is uniquely Indian innovations that are not just small innovations, right? So I don't like this word jugaad, Chandra, right? Because jugaad doesn't scale. I like significant innovations that scale massively. And I think we are now at a point in our ecosystem, we are seeing scale and we are seeing unique innovations that are India first. But they're not just Indian, right? They're India first and they will travel around the world. And all I can tell you is, if you're an investor, please do invest in startups. There are many, many different ways in which you can start investing in startups. And if you're a founder, this is the right time. And the only thing I'd say is, look, if you can't raise funding today, don't worry about it. Focus on building a company. What was amazing last year, what we saw, Chandra, is companies that had deeply negative unit economics all of a sudden started breaking even. You know why? Because they had to, right? So find a way where you can make your business work. And the last thing I would say is, startups don't fail. Founders give up. So you may want to hang up your boots, but I would say, find a way to make it work, because if this is truly your life's work, you've got to find a way to make it work. And there's never been a better time.
Nithin?
Yeah, no, firstly...
You've of course, built a completely different playbook. So, yeah.
No. Firstly, I need to thank Rajan for the kind words and all the enthusiasm. I'm like, I feel like going and starting a new business right now. So, but I think I'm most
Rajan,
excited.
you're like the classic evangelist. You're in like startup evangelism mode. You've motivated all of us. Even I feel like going and starting up something, but media space is very tough, so I'm not even going to get there. Yeah, but Nithin.
Yeah, no, I think what I am most excited about, like if you were to ask me 2 years back, what is it TAM for, say, people looking to invest, save in Indian markets, I would have said maybe subset of like a 3 or 4 crore kind of number. But if you were to ask me today, I'd say it's probably 8 to 9 crores. And I think this whole last year, it's just turned around. People are maybe the low interest rates in the economy, or maybe because people have more money to spend or more money to save, invest, and they're looking at alternate asset classes, not just real estate and gold. So I think there is this whole new audience of customers looking at saving, investing in the markets. I think the opportunity is to kind of help them do it correctly, and I think it's a tremendously large kind of an opportunity right now.
Right. On that very optimistic note, thank you all very much for joining us on the 5th episode of Moneycontrol Masterclass. I think I'll have to replay this conversation again because there were just so many insights from all of you. So thank you very much, Rajan, Nithin, Radhika, and Vidit, for joining us, taking us through, what an amazing time it is to start up. And hopefully this will be an enduring trend because we are seeing a confluence of factors that will make it right for India and Indian entrepreneurs. So thank you very much for joining us.
Thanks.
Thank you, Chandra.